There are some HMRC tax checks you cannot avoid. Every year, HMRC conducts many of these checks. According to HMRC, in 2024-2025 tax year, their compliance work secured £48 billion of tax revenue. This means HMRC is serious and they are not resting on these checks. They have again said that in 2024-2025 tax year, they completed 316,000 compliance checks. This means you cannot avoid many of these checks. These checks are not random. Some are triggered by automatic red flags, and some are required by the law, which means you cannot avoid them. And so in today's video, I'm revealing the unavoidable checks, what triggers them, and what to do to prepare to avoid fines, stress, and sleepless nights. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co. Accounting and Tax Services. The first on the list is compliance check. So compliance check is basically HMRC's mini investigations into your tax affairs. They compare the information that you have presented to them with the information they hold from your banks, from overseas sources, from online sales platforms like eBay, like Amazon, from your social media platforms like Instagram, like YouTube, with what you have presented to ensure that everything that they hold about your self-assessment, about your VAT returns, about your payee submissions are accurate. So that is the first check HMRC conducts every year to ensure accuracy. So what are some of the triggers for compliance checks? The first on the list is if there are mismatch in numbers. For example, if your information that you've provided to them on your tax return about your employment income is different from what your employer has sent to them, that will trigger and that may raise a compliance check for HMRC to ensure accuracy. The next trigger is big changes on your return. If all of a sudden, for example, you are claiming huge amount of expenses on this year's return compared to previous year, HMRC may want to know why, and that can trigger a compliance check. The next trigger is making tax relief claims that are not common in the business industry that you are in or compared with other individuals like you. That can trigger a compliance check. Therefore, to be prepared, you need to keep all records intact. You need to keep all receipts. You need to keep all your P60s. You need to keep all invoices that agree with what you have presented to HMRC. This way, you are prepared in case any compliance check is raised. You will be able to present your evidence to cover you that everything that you've presented to HMRC is accurate. That is the first check HMRC conducts every year. The next check is VAT and Expense Audits. If you are VAT registered in the UK, most certainly HMRC will conduct a check in your affairs at some point in time, especially if you claim VAT refunds every year. You are bound to have a VAT check at some point in time. What are some of the triggers of VAT checks? As I said, the first one is if you regularly claim VAT refunds. The second check is if your input VAT is all of a sudden higher compared to the sales, then that can also trigger VAT checks. If you are in a sector that is considered a high-risk sector, such as construction, such as online retail, you may get VAT checks. If you are constantly submitting your VAT returns late and or making VAT payments late, you may get VAT checks. Remember, HMRC knows what is normal in your sector. So if you submit anything that is a little bit different from what other people in your sector have submitted, then that can also trigger a compliance check. If you have old expenses pattern, that can also trigger a VAT check. These are some of the triggers that can raise a check on your VAT return. Then how do you then keep yourself safe and ready should a compliance check be raised? The first thing is to ensure you have VAT invoices for what you have presented on your return. And again, the VAT invoices are correct according to what you have submitted to HMRC. You again need to cross-check everything on your return as accurate before submitting it to HMRC. Doing this will keep you safe should a compliance check be raised. The next check is property and capital gains tax check. In the UK, if you sell any property located in the UK, HMRC gets the information. Therefore, if you have sold any property that is not your main residence where you live or have lived throughout the ownership period, you need to declare the gain that you've made on that disposal to HMRC within the right time frame. If you don't do it, HMRC can see it and they can come for their money from you. If you have sold a residential property in the UK, you have 60 days to declare it to HMRC. If you fail to do this, you will get a penalty. And if you fail to do it, that can also raise a compliance check. That can also raise a check in your affairs. HMRC will look at your sales proceeds, the original cost. They will also look at any capital expenditure that you have claimed on your capital gains tax computation. And they can raise a compliance check if they believe something is a bit off. And so, to keep yourself safe, you need to keep all documents such as completion statements, solicitors' letters, invoices and receipts surrounding the sale of the property, so that when HMRC raises a compliance check, you have them to keep yourself safe from any trouble. If you have found value so far in this video, please hit the subscribe button to encourage us to make more educative videos such as this. And it will also help move the video to people who may also find it useful. And don't forget to hit the like button to signal us that you are finding value in this video. The next check is around large cash deposits. If you receive large cash deposits, some may be from inheritance, some may be from income from overseas source, some may be from gains from overseas source. If these are income or gain, as a UK resident, you are required to declare this to HMRC at the right time within the right tax year. If you fail to declare this, you may get a compliance check, because remember, HMRC can request for your bank statements at any time, and they also get information from the banks about some of these things. And so even if you fail to declare it to HMRC, they may have it at some point and they may raise a compliance check. If you believe the cash deposit is from inheritance, then you need to have the right document to back it up, so that if in future you get a compliance check, you will have that as evidence to show that it is indeed inheritance. In the UK, if you receive cash inheritance, you don't pay any tax on the cash inheritance that you have received. But if the cash generates any form of income, that income or gain will need to be declared to HMRC. So have your records intact to back any inheritance. Otherwise, if you believe it's income or gain, declare it to HMRC within the right tax year, so that you are safe should any compliance check be raised. The next check that we're going to consider is payroll and IR35 reviews. HMRC conducts these reviews to make sure you are paying the right amount of tax according to who you are based on the tax rules. If you are an employee, HMRC will want to see you working as an employee and paying tax as an employee. Therefore, to keep you safe, you need to do your status determination test using the HMRC online tool to determine who you are and who you should be working as. Otherwise, if you work wrongly under different status and pay wrong amount of tax, HMRC will catch that through their IR35 reviews, and they will raise a check in your affairs and you will receive a letter to that effect. If they see that you haven't paid the right amount of tax, they will ask you for any remaining tax to be paid back to them within the right status that you should have been paying the tax. Therefore, to ensure that you are working within the right status, use the HMRC status determination test to check your status and pay the right amount of tax. That is the next check. It is becoming harder and harder to avoid these checks because HMRC now have a software called the Connect software. The Connect software tracks all your activities, and so you can't hide anymore. Therefore, it's crucial to check your affairs to ensure you have declared everything and you are clean. Otherwise, if HMRC finds out, the effect is usually harsh and you don't want to go through the stress and sleepless nights. Therefore, what do you need to do if indeed you find yourself under any of these checks? The first thing is, if you receive any letters from them, keep calm. Some of them are just routine letters and there is no cause for panic, especially if you have all your evidences intact. Stay calm. The next thing is to reply to the letters on time, because if you delay, it may increase penalties if there are penalties. Never ignore HMRC letters. Always respond to HMRC within the right time frame. Again, provide exactly what HMRC has requested from you, because after review, if everything tallies and every information that you give them is as accurate as the information you've already presented, there is no cause for alarm. So keep calm, gather your evidences and respond to HMRC on time. The most important thing to do in case you get any checks is seek professional advice. That will save you a great deal of time, stress, and energy. Seek professional help to guide you the right way. We are here to help should you ever need any of our help, or speak to your own accountant or tax advisor to help you navigate any checks you may get. We have this video that will help you appeal against any penalties that you may get through any of these checks. Watch it next to familiarize yourself on what to do to appeal against any penalties. As always, all our videos are for education purposes only and should not be in any way taken as a tax advice or any form of advice. For your own personal tailored advice, please speak to your own accountant or tax advisor, or contact us if you need any of our help. I hope this video has been useful. If it has, please subscribe to our channel and don't forget to hit the like button to send us a signal that you have found value in this video. Thank you for watching.